gold is climbing a wall of worry and no one's focusing on it.
You're watching Silver News Daily. Subscribe for more.
The global financial markets are on the brink. The U.S. dollar is weakening, and the so-called everything bubble is about to burst. But amidst this chaos, one asset is poised to rise above the rest: silver. In today's video, we're diving into why this massive crash could be a catalyst that sends silver prices soaring to unprecedented heights. Stick around because you need to hear this before making your next investment move.
Western investors, Japanese investors, basically to borrow a lot of money for nothing and buy everything that yields more than zero. And that's why, in my opinion, that's been it's not been the only thing that's inflated the everything bubble, but it's it's one of the big pillars of it. And I think this pillar is ready to come crashing down. And there's still a few other pillars out there, of course, like Fed money printing and QE. They could still use that, or any other program that the Fed deems necessary to keep the bubble going. So that's why I think we could see, it's difficult to say how long it will take, but the everything bubble could, there's two ways I think that it could unravel. One is that everything collapses and you get 1929 style deflationary depression. Everyone goes bankrupt, almost everyone, unless you're not in debt. Or you could see the bubble still keep blowing, but the flip side will be that the currencies are going to be worthless. So either way, it's not good. I don't think there's a middle ground. And we've seen that just by trying to raise rates in a tiny amount, the Bank of Japan has created a lot of problems. And very few people realize that the Bank of Japan is still doing like massive amounts of QE. They're doing like, if you equated the Japanese economy to the American economy, it would mean that the Fed would still be doing like $250 billion of QE a month. That's how much Japan's still pumping into the system. So that's how things are, and that's why, Elijah, I'm still holding on to my gold and silver. I'm still trying to stack as much as possible, even though it's not easy, of course, because you need to be able to put some fiat currency aside after all your expenses at the end of the month. Yeah, and I don't think they're going to be able.
The U.S. dollar's recent struggles are sending shockwaves through global financial markets, and the effects are starting to ripple across all asset classes. Silver, often considered a safe haven, has experienced a dip recently, hovering around $27.50 per ounce. This decline comes as a result of an improved risk sentiment in the market. Investors are feeling cautiously optimistic, pushing back into riskier assets. But don't let this temporary dip fool you. Mario Eneko, a respected voice in the precious metals community, recently highlighted how these market movements could be a calm before the storm. He pointed out that while the market's current mood might appear stable, underlying economic threats are far from being resolved. The weakening of the U.S. dollar is just one symptom of a much larger problem, a financial system stretched to its limits. Eneko has emphasized that the current everything bubble is built on shaky ground, with the dollar's weakness serving as a warning sign. He argues that the market's current complacency might soon give way to panic as the true extent of economic instability becomes apparent. And when that happens, silver could quickly shift from being a sidelined asset to the star of the show. So, while silver prices may have dipped due to this so-called improved risk sentiment, remember that the very same sentiment can flip on a dime. The underlying fragility of the global financial system suggests that this dip could be a fleeting opportunity before silver begins its inevitable climb.
The Japanese yen is one of the major currencies. I think it's after the euro, it's the has the most weight in the dollar index. Prior to the euro, it used to probably be the third behind the Deutschmark. And the foreign exchange market, many people don't realize, is probably the biggest market uh, in the world in terms of how much they trade every day. They trade trillions of it. And what happens, the current currencies are like at the base of the financial system. People borrow or they lend in the currencies, and then whoever gets the currency, they'll go and buy assets. Everything's leveraged with the derivatives. And as I said, it's for years, the Japanese yen has been steadily, especially since 2013 with Abenomics, because the yen bottomed at around, or the dollar bottomed, sorry, at 80 yen, I think in 2013. That was the level. And the yen has been dropping ever since. But recently, that drop accelerated, and the dollar got up to above 160, which is a 34-year high. And even though that is good for the carry trade, it's kind of bad for Japan, because if you lose control of the drop in the currency, it's a big problem for Japan, for savers, for pensioners, for everyone, and especially seeing that Japan needs to import a lot of raw materials because it processes them and then exports it. So what they've been trying to do is kind of stop the yen from dropping too quickly. But what happened is that it went the other way, and the yen rose too quickly, and the dollar dropped too quickly. By the beginning of this week, the dollar had dropped to 140. So they've created massive volatility in the yen. And the yen, as I've said many times in the last few years, I've covered the yen carry trade. It allows
Now, let's turn our attention to the growing geopolitical tensions that are quietly fueling silver's potential as a safe haven asset. Recent developments in the Middle East, including the U.S. deploying a guided missile submarine to the region and escalating conflicts in Gaza, are creating an environment of uncertainty. Historically, such geopolitical instability has driven investors to seek refuge in precious metals like silver. Mario Ineco has often warned about the dangers of underestimating these geopolitical flashpoints. He believes that while the markets may be focusing on day-to-day economic data, the real risk lies in these simmering global conflicts. According to Ineco, the rising tensions are not just isolated events. They are signals of a broader trend of instability that could catch many investors off guard. Ineco argues that as these tensions escalate, the market's so-called improved risk sentiment could quickly evaporate, leading to a surge in demand for safe haven assets. Silver, with its dual role as both an industrial metal and a store of value, stands to benefit significantly from this shift. The current lull in silver prices might just be the market's way of underpricing the risk of a sudden geopolitical escalation. As the world edges closer to potential conflict, investors are likely to flock to silver for its stability and security. So while it might seem like silver is taking a backseat to other assets right now, the growing geopolitical instability could soon propel it to the forefront of the financial world.
And then last week, they raised it again by 0.15 to 0.25 positive. That was only the second time in like over 20 years that they've raised rates. And the markets didn't react very well on Friday. Last Friday, I think the Nikkei was down 2,000 points, which was the biggest drop since Black Friday in October of 1987. And then this Monday, or overnight from Sunday, the Nikkei dropped 13.5%, which was even bigger than the drop on Monday. And the pre-market futures indices, the Dow, NASDAQ, S&P, they were down massively on Monday before the open of the market. They did manage to kind of stabilize. And despite the fact that we finished down quite a bit on Monday, the markets seem to have calmed down for now. The deputy governor of the Bank of Japan, he's come out and said that they will only raise rates again um, if the market stabilize. But the problem is the markets were destabilized by their rate hikes. And I think it just goes to show how leveraged the whole Japanese financial system and is, and how it also affects the Western financial system because for decades people have been borrowing in yen because it's very cheap. The Japanese yen is usually weakening, and they can borrow. They could until recently borrow for a negative. Now it's positive. Yeah, and that's what's happening. And I'm not convinced this Japanese yen carry trade crisis is over. I think we've just seen the tip of the iceberg. And there are problems, of course, all over the world in terms of economics. The US economic data are getting weaker and weaker. We're seeing the yield curve, the twos, tens in the US approach almost flat. And usually, after it's been inverted, that curve, when it disinverts, it points to a recession in 3 to 6 months after that. So there's a lot of things going on. And say apart maybe from silver, which has been a little bit volatile, gold has held really steady, and I spoke about that this morning, and we're talking on Friday, the 9th of August with Clive. And yeah, in the week where the markets were so choppy, we saw the VIX index explode as well. Gold has held like a rock that it is, right? A pet rock, as they say it.
The Federal Reserve's next moves are looming large over the financial markets, and their impact on silver could be profound. Investors are closely watching for signals about interest rate cuts, especially as recent data has shown a mixed economic picture. The Fed is in a precarious position. Tighten too much, and they risk pushing the economy into a deep recession. Loosen too soon, and they might lose control over inflation. Mario Ineko has been vocal about the dilemma facing the Fed. He argues that the central bank is caught in what he calls a debt trap situation, where they can't achieve their goals without triggering some form of financial crisis. Ineko believes that the Fed's hesitancy to act decisively is contributing to the growing sense of unease in the markets. According to Ineko, if the Fed does proceed with significant rate cuts, we could see a rapid devaluation of the U.S. dollar, which would, in turn, trigger a flight to assets like silver. On the other hand, if the Fed holds off on cuts, the economy could grind to a halt, spurring investors to seek out the safety of precious metals as a hedge against a potential downturn. Either scenario points to a bullish outlook for silver. Ineko's analysis suggests that the Fed's actions, or lack thereof, could serve as the tipping point for a significant shift in market dynamics. As investors lose faith in the dollar and seek protection from economic turbulence, silver could emerge as a key beneficiary. The stage is being set for a potential surge in silver demand, driven by the very uncertainty that the Fed is struggling to manage.
People were rushing to gold because they're thinking, my deposits, well, actually, it's not even your money in the bank; it's your unsecured loans to the banks are in trouble. So let me get out of it and cash in and get some real specie gold and silver. And GLD and ETFs won't do. So I think the other factor that is helping gold prices is the fact that a lot of foreign sovereign nations and even people like in China and India, they're still accumulating a lot of gold. I know China officially has stopped buying gold since May, but I think they're doing it through the back door because they don't want the price to take off too quickly because they still have a lot of foreign reserves in fiat currencies, especially in dollars.
Inflation is the invisible force that's eating away at the global economy, and its impact on silver cannot be overstated. As inflation continues to erode the purchasing power of fiat currencies, investors are increasingly looking for ways to preserve their wealth. Silver, with its historical role as a hedge against inflation, is naturally coming into focus. Mario Ineco has been clear about the dangers of ignoring inflation. He points out that while official figures might suggest that inflation is cooling, the reality on the ground feels very different for most people. Ineco believes that inflation is not just a temporary phenomenon, but a symptom of deeper structural issues in the global economy, issues that central banks are struggling to control. Ineco also notes that the Federal Reserve's potential rate cuts could exacerbate inflationary pressures, making silver even more attractive as a safe haven asset. When inflation rises, the real returns on most investments fall, but silver tends to move in the opposite direction, offering a protective shield against the loss of value in paper money. The prospect of ongoing inflation, combined with the Fed's uncertain policy path, sets the stage for a significant uptick in silver demand. As Ineco suggests, this isn't just about short-term market moves. It's about a fundamental shift in how investors perceive value and security. In a world where fiat currencies are losing their luster, silver stands out as a reliable store of value, poised to benefit from the economic turbulence ahead. So, as inflation continues to gnaw away at the global economy, remember that silver has historically been one of the best defenses against the eroding value of money. This could be the catalyst that finally propels silver to new heights.
And right now, we think the banking sector is fine because they saved the day back in March of 2023. Everything's quiet now, but he's right. It could flare up again, and it will be even worse because people have probably gotten complacent, investors and people with money in banks, because they think, well, the Fed and the Treasury bailed everything out last year. So yeah, it feels a little bit like the subprime mortgage crisis. I think a lot of the subprime lenders started going bust in the spring of '07, and it wasn't until, well, the fall of 2008, when Lehman collapsed, that things really started, that the crisis culminated. So yeah, it could very well be that if the Fed sees the banking sector under pressure, that they will save it, because that's what their real mandate is. The Fed's mandate, what they tell the public to maintain full employment and stable prices. That's just for politics. But the real purpose of the Federal Reserve is to allow banks to privatize their profits, but when they lose and the system's under pressure, they will socialize the losses, and by that I mean they will inflate the currency out of thin air, and that will hurt the public, or they'll bring in the Treasury to bail out the banks. Unfortunately, yeah. So I think Michael Oliver's take is spot on. We just need to keep an eye on that banking index.
The U.S. dollar has long been seen as the cornerstone of global finance, but cracks are beginning to show. As the dollar weakens, the world is waking up to the reality that its dominance might not be as unshakable as once believed. This decline isn't just a blip. It could signal a fundamental shift in the global financial order, one where silver might emerge as a critical player. Mario Ineco has frequently discussed the potential consequences of a collapsing dollar, warning that it could trigger a dramatic shift in investor behavior. According to Ineco, the dollar's decline is tied to a loss of confidence in the U.S. economy's ability to manage its debt and maintain its global influence. As faith in the dollar erodes, investors will inevitably seek out safer, more reliable stores of value. Ineco points out that in previous economic downturns, The dollar often strengthened as investors flocked to it as a safe haven. However, this time could be different. With the U.S. facing unprecedented levels of debt and ongoing economic challenges, the dollar may no longer be seen as the ultimate refuge. This shift in perception could lead to a mass exodus from the dollar, with silver standing ready to absorb some of that fleeing capital. As the dollar loses ground, silver's appeal as a tangible asset, one that holds intrinsic value regardless of currency fluctuations, becomes even more pronounced. Ineko believes that silver, unlike the dollar, isn't subject to the same kind of erosion from monetary policy missteps or fiscal irresponsibility. It's a hard asset that has been used as money for centuries, and in times of financial instability, it's precisely these characteristics that make it so attractive. So, as the US dollar continues to weaken, don't be surprised if silver steps into the spotlight. With its historical role as real money and its intrinsic value, silver is well positioned to become a key safe haven as investors seek to protect their wealth from the fallout of a declining dollar.
Well, I think if you look back, I think it was 08, 02, and even maybe 2020, when the Fed starts cutting, the markets actually keep going down. It's only after the crisis really culminates, like it did in with the Lehman collapse, that things start stabilizing. So yeah, the Fed might do something prior to September, I think September 18th, the second day of their meeting. But like I said in one of my recent videos, the working group on financial markets was created as a consequence of the 87 crash. It was created in 1988, and it put together the SEC, the CFTC, the Fed, and the Treasury to oversee markets. And I think on Monday they were probably very busy on Zoom talking to each other before the markets opened. And I think uh, they helped stabilize a little bit the markets when they opened a regular hour, and that's why I think things picked up again. But the this PPT or working group, they can only do so much because the market is much bigger than they are. And the market's resources are much bigger. So eventually, I don't think they can kind of calm things down, but eventually, unless the powers that be want everything to implode and collapse completely, like in 1929 to 1932, they will have to come in and throw the kitchen sink at it again. And by that, I mean cut rates massively, the Fed funds rate, and announce another huge round of QE.
The concept of the everything bubble has been circulating for years, and now it seems we're closer than ever to seeing it pop. This bubble isn't confined to one market or asset class. It's a global phenomenon encompassing stocks, real estate, bonds, and more. But what happens when this bubble bursts? According to Mario Ineko, the fallout could be catastrophic, with silver poised to rise from the ashes. Ineko has long warned that the everything bubble is built on unsustainable foundations, excessive debt, over-leveraged assets, and dangerously inflated money supply. As these factors converge, the risk of a sudden and severe market correction grows. Ineko suggests that when this bubble bursts, it won't just deflate, it could implode, wiping up trillions of dollars in wealth almost overnight. This scenario might sound dire, but for silver, it could be the opportunity of a lifetime. Ineko argues that in the face of such a collapse, investors will scramble to protect what they have left, turning to tangible assets that can weather the storm. Silver, with its unique properties and historical role as a safe haven, could see a dramatic increase in demand as people seek to preserve their wealth. Ineko also notes that unlike other assets, silver isn't just valuable, it's accessible. This accessibility makes it a practical choice for a wide range of investors, From individuals seeking to protect their savings to large institutions looking to hedge against market volatility. As the everything bubble starts to unravel, silver's role as a reliable store of value will likely become more apparent, driving prices higher. So, while the everything bubble looms large over global markets, remember that silver stands out as a potential lifeline. As Eneco suggests, this is a time to seriously consider how silver could protect your wealth in a world where traditional assets might no longer offer the security they once did.
Gold, just like every other currency. But as we've seen recently, the dollar could collapse as well against the yen because we've seen it go from 160 to 140 in a matter of weeks. So you could have the dollar go down to 100 versus the yen, but against the other currencies, it might stay pretty stable. But I think the currency that's really going to gain is going to be gold. That's the way I see it, because if the everything bubble is really pricked and people start trying to get out of the cinema, so to speak, they're going to be selling everything. And I saw a little chart the other day, and it compared stock markets in 1900, I think, or something like that, to now, and the market caps. And back then, the U.S. had a 14% of the world's market cap, I think, or maybe even less. But now it's like almost 50%. So I think, yeah, the dollar would get hurt because foreigners would be.
As we approach a critical juncture in the financial markets, it's essential to look at the technical side of silver's price action. Silver has been trading around the $27.50 mark, but several key resistance levels lie ahead that could determine its next major move. According to analysts, the 50-day moving average at $29.36 is a significant hurdle, and a breakout above this level could signal the beginning of a powerful upward trend. Mario Eneco often emphasizes the importance of understanding these technical markers, not just for short-term traders, but for long-term investors as well. It points out that silver's recent performance, despite the current market volatility, suggests it's building momentum. Eneco believes that once silver clears this resistance cluster, comprising the main top at $29.23, the 50-day moving average, and a major pivot at $29.50, we could see a rapid advance towards the $31.76 mark, with the ultimate target being the May high of $32.52. Eneco is quick to remind us, though, that technical levels are just part of the picture. The broader economic environment, marked by rising inflation, geopolitical tensions, and the weakening U.S. dollar, provides a strong fundamental backdrop for silver to break out of these resistance zones. In his view, this convergence of technical and fundamental factors makes silver's potential breakout not just likely, but almost inevitable. As we watch these levels closely, it's important to remember that silver's volatility can work in your favor as you're prepared. Eneco advises that investors keep an eye on the $27.22 minor support level, as holding above this could provide a solid base for the next leg up. Conversely, if silver fails to clear the $29.50 resistance, we might see some consolidation before the next attempt. But with the underlying pressures in the global economy, Eneco suggests that any dip could be short-lived, offering a buying opportunity for those looking to capitalize on silver's long-term potential. So, whether you're a seasoned trader or a long-term investor, this is a critical moment to stay vigilant. The technical indicators are lining up, and if silver can break through these key resistance levels, it could be the start of a significant rally.
Last thoughts? Yeah, try to ignore what CNBC, Bloomberg, or all the mainstream financial news tell you about things. Focus on the fundamentals and the fact that the debt is like not going to come under control, despite no matter who becomes president on January 20th. and yeah, focus on stacking, not to make money, but to protect your savings. And you can find me on YouTube at Maneko64. I'm on X as well at Maneko 1964, even though it's getting more and more dangerous for me there, being in the UK. I need to really watch what I post there because I could get a knock on the door. And that's another sign that things are really going.
Supply and demand, two forces that ultimately dictate the price of any asset, setting the stage for a potential explosion in silver prices. On the supply side, the situation is becoming increasingly tight. Silver production has been struggling to keep pace with rising demand, particularly from industrial sectors. As the world pushes further into green technologies, the demand for silver, a critical component in solar panels and electronics, is only expected to grow. Mario Ineco has highlighted this imbalance between supply and demand as a key factor that could propel silver prices higher. He notes that while many are focused on gold, silver's dual role as both an industrial metal and a store of value gives it a unique advantage. Ineco points out that the industrial demand for silver isn't just a trend, it's a fundamental shift that will continue to drive demand well into the future. On the other hand, investment demand for silver is also on the rise. As more investors recognize the vulnerabilities in the global financial system, they're turning to silver as a safe haven. Ineco suggests that the combination of rising industrial use and increased investment demand creates a perfect storm for silver prices. He argues that this isn't just about short-term gains. This is about silver reclaiming its historical status as true money, a reliable store of value in times of economic uncertainty. Adding to the pressure on supply is the fact that silver mines are becoming increasingly difficult and expensive to operate. With limited new discoveries and higher production costs, the available supply of silver is constrained. This supply-side crunch, combined with surging demand, is setting up a scenario where silver prices could see dramatic increases. Ineco emphasizes that this supply-demand equation is one of the most compelling reasons to consider silver now, before the market fully realizes the implications. He believes that as the reality of these dynamics becomes more apparent, we could see a rush into silver, pushing prices to levels that few currently anticipate. So, with the fundamentals so strongly in favor of silver, this is a moment to seriously consider its place in your portfolio. As Mario Ineco suggests, the convergence of rising demand and tightening supply could be the catalyst that sends silver prices through the roof.
Silver, it is partly monetary, but it's also partly industrial. So it always gets kind of affected more than gold when we see a stock market drop like this. But I still think we're up on the year. And I think we're holding, if you look at the bigger picture, we're still holding some key technical levels. And yeah, silver is always more volatile. And yeah, and if you hold both gold and silver, yes, your silver is kind of not paying off right now, but your gold is. So it's okay, I think. And I think eventually silver will, and I've been saying this, of course, for the last few years, but usually in the massive precious metals bull market, silver does outperform. And if you look at gold, I mean, the chart looks really explosive, especially like a quarterly chart going back 30 years. And it's amazing that so few people are looking at that, which is a good thing. There's no like the sentiment is kind of very neutral. There's no hysteria yet, like there is with other assets like cryptos or even Nvidia. Gold is like climbing like a wall of